All right, showtime. What is up? Good morning, guys. Good morning, Andrew. What's happening?
Good morning. Yeah, good morning. Just dealing with some allergies. It's allergy season.
Yeah, good times.
Yeah.
So talking today about debt problems, if they're getting worse or better. So when did you join TDF? It was 2005, 6, 7, like in the mid
I think
2000,
it
right?
was January 2005 or January 2006. So it's been 14, 15, maybe 16 years ago.
Yeah, it's coming up close to 20 years for me that I founded the business. And I mean, prior to that, I was in the credit collection world for another 10 years in my 20s. Um, how have you seen things change over that time frame from the mid 2000s to where we are today at 2021? Are things getting better? Are they getting worse?
It's a hard question to answer, but I could say that more people have credit cards today than they did 20 years ago.
Hmm.
I think it's easier to get credit cards today than it was 20 years ago. And I believe that the balances owed on credit cards today are probably overall larger on average than they were 20 years ago.
They're definitely going up. I pulled up the a chart here for debt service ratio, which is a metric that they started to scare people with in the 90s, when Canadians' household income was less than the amount of debt that they owed. It was around here. Let me put it up on the screen so you guys can see here. Share screen, window. Okay, that should do the trick. Let's just make it a little bit bigger. Okay, you guys should be able to see this, but it was around, let's see here, 1996 or 7, when they were really starting to talk about. So that's when people owed more than what they actually earned. Okay, about 96. It was 101%. And all that means is that they owed $1.01 for every dollar of income that they had. And if you pay attention to the curve, it's just gone up over time. We're at 177, or sorry, $1.77 right now for
That's
every
including
dollar,
that's
household dollar that somebody earns.
that's including secured debts though as well, I believe, right? That includes car loans and mortgages.
Yep. Yep.
Yeah. Okay.
Um, but the point being is that people have more debt than they have disposable income.
Oh, totally.
That's not a good thing.
That's not news to us. That's totally not news to us.
I mean, like around here, they were talking about like this is going to be the collapse of the economy, but still, we've managed to push through from 96 to 2021. We keep pushing this number up because, I mean, there's a whole bunch of reasons why this goes on. It's societal programming, for the most part, convincing people just to take on more debt, and it's okay to have more debt, and don't worry about it. We'll just figure that out later, just as long as we keep you enslaved to it, to minimum monthly installments. So uh, has has the mindset of people that you've been talking to changed since you started this in 2005,
Again, that's a hard
or is
question
it the same
because
conversations all the time?
it's similar conversations regularly, but because I'm in the game on a daily basis for the last 15 years, it's hard to see the differences and the changes when I'm in it every day.
Mhm.
Those that are outside of the industry would probably be able to see the differences a little bit easier than myself. But what I will say is people in today's society are willing to carry balances on their credit card and just throw small payments at the debt, thinking that at some point later they'll be able to address the balance that's owed. Not so much 20 years ago. I think 20 years ago, because the balances were smaller on credit cards, like we're seeing credit card balances upwards of $50,000 now. Some lenders, some banks will give $50,000 credit cards to individuals, and some of those credit cards are to people that don't even have majority or major assets. So they're renters without any property, and they're still getting $50,000 credit cards. We didn't
What
see
does their
those.
income look like if they've got a $50,000 credit card?
It ranges. It ranges. Like I've seen some people with high income of over 100,000 getting
Mhm.
those types of credit cards, but I've seen people with modest incomes at 50 and 60 still getting those types of credit card
Really?
limits. But there weren't limits like that, or many of them like that, 20 years ago. Most credit cards, like if we're talking specifically for credit cards, most credit cards were roughly $5,000, $2,500 limits, maybe a $10,000 limit here and there. The limits have continually increased over time, and as the limits have increased, people use that limit and they get themselves further in debt. And when you're further in debt, it's much more difficult to eliminate the credit card balance. If we're carrying, say, 25,000 on the card, that's very difficult to clear off just like that. Whereas if you're just carrying a $2,500 credit card limit and that's your balance, it's a lot easier to clear that off. You can have one commission check, you can pay that off. You have an income tax return, you can pay that off. It's easier to pay those types of balances off, which is why I think that over time, 20 years ago, people were more inclined to pay off the balance because it was easier to do so. Whereas today, it's much more difficult. So they're throwing small payments just to keep the creditors quiet and keep the debt active so they can continue to use it.
Yeah, people's income hasn't gone up in the same, at the same rate as the debt loads, which is why the debt keeps piling up. Are you seeing the total debt enrolled, the balances of the total debt enrolled going up? Is it staying the same? Or is it going down? What does that look like?
It varies from person to person. It all depends on what kind of debts they're carrying. I
Because I
think
mean,
with
we used to track this fastidiously back 2008, 9, 10 when I was at the helm. I think it was around $35,000.
Yeah, it was the average back in the day. Yeah, I think. Well, just recently we retained a client retained us about a month ago, and their debt load was $170,000 of unsecured debt.
Is
So
that becoming more common? Because I mean, we used to see that.
um, I'd say it's more common to see larger sums of debt, but not that extreme. Like the 170
You're seeing more
example,
extremes, is what you're saying.
yeah, I'm seeing the 170 here and there. But I'd say there's quite a few people with balances over 50,000. A lot of people are now inquiring, looking for help to eliminate over 50,000, whereas before it was slightly smaller. Like I said, credit card companies, they have a fiduciary duty and they have rules and regulations they have to conform to, but they have been very good over the last couple of decades at increasing credit limits. And until recently, they had to get the consent of the cardholder to do so. But I think up until 2010, they didn't need to get the consent. So they were regularly increasing credit limits on people's products without consent, just to give them more access to credit, put them further into debt. And people were taking advantage of it. They were utilizing those credit products to go out and buy whatever they were looking to buy on their credit card. And with banks doing that regularly up until 2010 without regulation, that's where you probably saw a big increase between 2000 and 2010. And then when the regulation came on in 2010 from the federal government to restrict then that's when the banks started to get receiving consent from the cardholder, and there was less increases to credit limit at that point.
Yeah. Yeah, there's a lot going on here behind the scenes that we've already talked about quite a few times, and there's things we just don't even bother talking about because, to be honest with you, it's pointless. But yeah, this is not a good trend. This is honestly not a good trend. I mean, it was a bad trend. They were looking at the economic consequences when it was around 130, 131 percent, or $1.30 for every dollar of household income, and it's only gone up since then. This COVID thing has. I mean, if you look at the chart, I mean, I don't have it up on the screen anymore, but it looked like it spiked up about 20%. I mean, the long-term consequences of lockdowns on the economy and small businesses and people's ability to work and make money and run their businesses and go to work and earn. I don't think they've considered this. For something that, I mean, if I'm being honest from my perspective, you look at the numbers and not a lot of people die from this stuff, but it's correlated here when I'm looking at this chart as far as the numbers going up with the debt service ratio. It stops here in Q1 of 2020, so they haven't released the data from that date forward. Here, let me just take a quick search here and see if they got the full data for 2020.
Well, while you're doing that, I can just talk quickly about historically, year on year, the economy does generally get stronger. Yet, even with the economy becoming stronger, people should be in a better financial position. With the economy being stronger, you're seeing more and more debt. So regardless of how strong the economy might be, and obviously the economy has taken a downturn over the last year and a bit because of COVID, but as the economy has gotten stronger, people's financial position should be getting stronger, and it hasn't. It's been getting worse because they're more inclined on going out and financing more expensive vehicles rather than buying the $30,000-$40,000, let's just an entry Honda Accord or a Toyota Camry that will last you forever. People are going out and buying $80,000 pickup trucks. and $90,000 large SUVs. So, with the debt ratio going up because of that, it's becoming difficult for individuals to sustain their expenses. Now, also, just quickly, I was told by a trustee friend of mine within the last month or so that trustee filings or bankruptcy and insolvency filings are at an all-time low over the last 25 years. And that's very unusual considering the amount of economy issues and the amount of individuals that have lost their jobs in the last year. So there's going to be a drastic spike and a significant spike in filings under the Bankruptcy and Insolvency Act once the economy reopens and people have gone back to work and now have an income to start servicing certain things. I'm quite certain there's going to be a drastic spike in filings under the Bankruptcy and Insolvency Act here in Canada.
Yeah, they're showing the numbers here. Like, they don't have the debt to income service ratio, but they're showing the total debt amount at close to $2 billion. Whereas in the last piece of data from that prior chart ended at $1.8 billion. So it's definitely piling up. Not good. Anyway, there's a lot to carve through here, but it's really, if we're being honest, it's just a train wreck unfolding in slow motion. Guys, if you've got credit card debt, let me throw the ticker on the bottom. If you've got credit card debt, you live in Canada, you're an expat, you might live outside of Canada, but you have Canadian debt and it's over $15,000, you can legally reduce it 50 to 70% and get debt free in a few years. So check out totaldebtfreedom.ca, fill out the consult form. When you complete that, schedule in a timed call. So you've got a time slot to get a consult. If the total debt freedom solution with settlement isn't the right one, it's not going to work, then they'll send you somewhere else. Maybe a bankruptcy or an equity takeout on stuff you're sitting on in your house might be a potential solution. Do you have anything else that you want to say before we wrap up, Andrew?
No, it's just people just really need to pay attention to their finances. We've been saying that for a while now, there's no reason to have a debt service ratio of $1.71 or 180, whatever that number was, when it can be a lot lower.
Let's put it this way: like, if you're throwing money at your statements and bills when they come in, but you're not seeing them move down, they're not going south, they're not getting paid off, that's a pretty clear indicator that what you're doing isn't working and it's time to do something different. Anyway, we'll leave it at that note. We'll see you guys next Saturday morning. Let us know in the comments what you'd like to see more of, what you'd like to see less of, and we'll catch up with you guys in the next broadcast. Have an amazing